Hi everyone, Gianni DePocci here with you for TheoTRADE, and today is Tuesday, the 26th of August, 2025, and we're seeing another quiet day. We are still digesting the news of Powell's pivot from Friday, which sent stocks soaring, took the Dow Jones to new all-time highs, but we did not see a new all-time high follow just yet in the S&P 500 or the Nasdaq. But started off the week with some selling. Now you're getting a little bit of a rebound. We are up off the lows of the day, and as you can see right now, we aren't pressing onto the session highs. But what gets me most interested right here and right now is the fact that the Dow is showing some uh, lagging behavior. You're seeing the Nasdaq actually outperform to the upside. So that's a bit of a flip from Friday. I was actually a little bit concerned on Friday to not see the Nasdaq or the S&P make new all-time highs. We've seen the outperformance from the tech sector slow down quite a bit, and that is a bit of a concern because we like to see tech lead. But that's not the case today. You are seeing semiconductors up nicely. Obviously, tomorrow we have NVIDIA earnings. I'm actually going to be live with my friend and colleague Garrett Baldwin at the close here at TheoTRADE. So you don't want to miss that. We'll be covering the market's response to NVIDIA earnings. But safe to say, you get a breakout higher in NVIDIA here following the earnings report. It could be a catalyst for the S&P and the Nasdaq to join in on the all-time high party. Now, is it going to be a buy the rumor, sell the news for the overall market? Well, it's not just NVIDIA that is showing signs of promise here within the big tech space. You did have Google hit a new all-time high yesterday, which is a pretty good sign. But you have seen Microsoft, which has been one of the stronger names in the Mag 7 space, start to lag. Now, I still am very interested in stocks like Apple and Tesla. I'll take a look at Tesla with you here in just a moment. But Apple, I like how it formed a higher low. It's interesting how Apple is kind of throwing in the towel on the AI arms race. And now that the narrative has kind of shifted on AI over the last couple of weeks since, stocks had a 2% pullback and it's the end of the world basically. But, Apple is kind of not developing their own AI internally. They're kind of relying on outside entities for AI in that respect. And it seems like the market has actually responded to that decision pretty well as of late. And remember, this is arguably the most important stock in the entire market. And so, you go on to make new all-time highs. It's probably going to support the indices pretty widely. But just to take a look at Tesla here, this is a position that I own pretty much in every portfolio that I trade, whether it's the Trinity Trade $1 million challenge. This is a stock that I think has a lot of potential for a big breakout and very soon. And it's not just Tesla. I like what's going on in China quite a bit. We've been talking a lot about China. You could take a look at FXI here, even CQQQ, Chinese tech. This is an absolutely mouth-watering, beautiful chart. And, I mentioned Tesla was kind of a segue into XPeng, which is a Chinese electrical vehicle company. Been very strong, actually $1 million challenge name. And we've had a pretty nice acceleration to the upside on that front. So I really like what's happening in XPeng, because one, I'm bullish on China. Two, I'm bullish on Chinese tech. And three, I think with the prospect of rate cuts coming from the Fed here soon, if you actually zoom out and take a look at what the Chinese market did back in September of 2024, we've been talking about this. It was a massive acceleration to the upside. It helps international markets outperform. Emerging markets have been very strong. I do think it's pretty much irresponsible at this point to consider China an emerging market. They are a developed market. They're the second biggest economy in the world. But it is a really good sign to see the participation broaden. Now, with the dollar showing some issues here, really failing to take hold of the upside prospect of lower interest rates, it's down against the yen and the euro today. A weaker dollar does support international stocks continuing to outperform. So it's a really consequential thing that we need to keep an eye on, because if dollar weakness continues even over the next several months, we know historically the characteristics of the Chinese market susceptible to massive price moves in short periods of time. I mean, we're talking like a market that can double in, 6 to 12 months pretty easily. And so, the chances of the US market doing that aren't as high, mainly because the US market is so big. But when you look at the possibility of a country stock exchange doubling over the course of 6 to 12 months, you have to realize what that means for individual stocks in that country. It means that you could have tremendous moves. I do have a position in Alibaba as well. It's been a very resilient name, and it's part of the terrific 10. I've been telling you to keep an eye on terrific 10 names because I think that you probably will start hearing a lot more about those compared to the Magnificent Seven over the next 6 to 12 months, so to speak. So that's what I'm seeing at an international market level. I still like tech. I still have my eyes on biotech. Last week, the best performing sector in the market was actually energy, but I'm wondering if the rally has already fizzled out there because crude oil is seeing a massive reversal on that. This has been a sector of the market that we've been very bearish on, not much excitement happening there. And I do think that at some point, crude oil's time will come, energy's time will come, but it's going to be later in later stages of this market cycle. It's a late cycle outperformer, and we're early. And remember, we hit a massive reset button back in April. Everything reset. And so, yes, this rally is getting closer to 5 months old. It's pretty crazy to think about. I mean, you hit September 7th, which is what, like a week and a half away. You're going to be at a 5 month old rally. So I would almost rather see stocks, at the index level, keep churning here, spinning their wheels, correct through time instead of price. That's looking pretty good, I think. And I think the best path forward for the bulls, but even the VIX really struggling to sustain any sort of rally on that front. You take a look at what's going on in Bitcoin and Ethereum. I think Bitcoin is actually in the process of carving out a bottom right now. I think that we are retesting former resistance turn support. When the process of forming a higher low, you're about to have the contract roll over to September. Ethereum has barely corrected. It's up almost 3% on the day. We're up very nicely from our initial buys in Ethereum back in late April. This is where we got long, April 23rd. And so, yeah, I mean, we actually have a big mover in the Trinity trade portfolio today, and Hut 8 mining up over 9% on the day. So, there definitely are things moving in this market, but I think a lot of the opportunities are going to be Ethereum related domestically. I still got my eyes, on the quantum sector. I don't think that theme is going away anytime soon. And in terms of AI, I think people are throwing in the towel a little bit too early. I mean, again, we're 2 weeks off of the all-time high in the Nasdaq. And the fact that people are even saying, "Oh, the AI bubble is bursting," I think is very irresponsible. Quite frankly, it's irresponsible because you usually don't see bubbles bursting when you're 2 weeks and 2% off the all-time high, and people are calling it quits. No, it usually has to be some sort of dramatic event. So, also keeping an eye on precious metals. I like what's happening in gold and silver. I think it's a weakening dollar story. Some interesting stuff happening in bonds today. You do see the 30-year bond lower, 10-year note higher. And so, a bit of a bifurcation taking place there. But, overall, I think this market is anticipating more liquidity coming down the pipeline. The rate cuts are coming. The rate cuts are coming. And it's going to send a lot of markets to the moon. You see the dollar weaken. It's going to send international markets, and I think especially China, to the moon. Don't sleep on China. Don't sleep on emerging technology in the US. But the problem is when it comes to that emerging tech, it's only a sliver of the market. It's not market movers. So, you might get Magnificent Seven names up 10, 20%. But when it comes to Chinese names, terrific 10 names, I mean, wouldn't be surprised to see those up, high double digits, even triple digits in the near future. So that's what I got going on here. That's what I'm looking at in this tape. I appreciate you guys tuning in. I am going to be doing another review tomorrow at 1 p.m. We're going to be talking about the freeze point strategy that I have used to beat the S&P by over 400% over the last 5 years. So I hope that you are able to tune in and join me on that. It's going to be at 1 p.m. Eastern. If you want to learn more, reach out to us here at TheoTRADE. That's all for now. Hope to see you in the TheoTRADE chat. Take care, everyone.